Welcome to another video. So Mintos and Twino have obtained their investment from brokerage license in Latvia. And in today's video, I will break down the most important features of this license and tell you how it affects your investments. In the second part of this video, I will be sharing my thoughts on PeerBerry withdrawing from the application to get the IBF license and pursuing the crowdfunding as well as the electronic money institution license in Lithuania. My name is Jakub from P2P Empire, and if you are new to this channel and your goal is to become a more educated investor, consider subscribing and hit the like button to see more content from us in the future. So generally speaking, investors expect some kind of additional securities when investing on a regulated platform. Is this the case with the platforms that are licensed in Latvia? Well, let's see. So what does the license do in the first place? Well, the platforms need to fulfill even stricter anti-money laundering requirements, which means that they will collect even more data about you. In addition to that, you need to pass the suitability and assessment test. This is a short questionnaire that tests your knowledge in P2P lending space. If you don't pass the test, you won't be eligible to invest or use some of the advanced features such as the auto invest or Mintos strategies. As soon as you pass the test, you will be categorized as a retail investor, which makes you eligible to invest in loans. The next change that you should be aware of is the structure in which the loans are funded. So you won't be investing in loan claims anymore, but in financial instruments that are issued by separate single-purpose vehicle in form of Mintos notes. Mintos claims that there is a benefit for investors. However, at the end of the day, notes are nothing else than just a bundle of 6 to 20 loans which are sold as financial instruments with an ISIN number. So repackaging the loans does not make your investment safer. Keep in mind that it will take at least 6 months for the regulated platforms to transform their systems from listing claim rights to listing notes. This is important because the investor compensation scheme does not apply for claim rights, but only notes, which are financial instruments. It has been rumored in the past that investors will benefit from an additional compensation scheme that would cover up to 20,000 euro. Now, we know that the benefits of this scheme are rather very limited. The investor compensation scheme in Latvia would apply only if the investment firm cannot fulfill its obligation towards investors, meaning they cannot repay your uninvested funds due to some unexpected circumstances. The investor compensation scheme does not cover your losses if the borrower or loan originator decides to not repay the debt. It only covers your deposited funds in the case where the investment firm cannot repay them. By default, you should always have access to your uninvested funds, as they are supposed to be segregated from the platform's balance sheet. This has worked without any problems on Mintos as well as on Twino in the past, so the benefit of having a compensation scheme for this is very limited. Both regulated platforms were not so transparent about the details of this scheme, particularly about who is funding and managing this protection fund, which is why we reached out directly to the Latvian regulator that provided more information. What's interesting is that the fund seems to be funded by the members of the investor protection scheme in proportion to their share in the total portfolio of financial instruments. As currently there are technically no financial instruments listed on both platforms, which means that there is likely no protection fund in place yet. Also, it's strange to have a protection fund that covers only your uninvested funds, which should be available through proper segregation anyway. So now you might be wondering, what are the benefits for investors that invest on regulated platforms in Latvia? Well, the risk of the investment firm being a scam is much lower. However, if you have been in the space for a while, you likely know that Mintos or Twino are legitimate players on the market. We have actually talked to the CEOs from Twino and Mintos, and both made a very professional impression. Both companies also provide audited financial reports, which you can review anytime. Whether the risk and reward ratio is good enough is a whole different story, but that's up to every single investor to determine by himself. What's good about this license is that you won't be able to operate in Latvia as a P2P marketplace anymore if you don't get it. This is also what happened for Viventor, who has withdrawn its application from the IBF license. They will either wind down the platform completely or move to a different jurisdiction. Another benefit is the suitability test. This test shows whether you have sufficient knowledge about P2P lending. If you don't make the test, I highly recommend binge watching all of the videos here on this channel and read all reviews on P2P Empire. If you're an experienced investor, you are able to pass the test without any problems. So those were kind of the main benefits in my opinion at least. Clearly, there is a lot of upside for the platforms that will be able to offer even more products such as ETFs or possibly investments in bonds. Authorities will also get more data about you, the investor, which will be forwarded to the tax authorities in Latvia as well as to the authorities in your country. From my understanding, both Mintos and Vino are not planning to withhold any taxes from your investments, which means that from a tax point of view, all remains the same. When it comes to the investor compensation fund, it's not something you should base your investment decision on. While the fund should be funded by participants of the scheme, I highly doubt that there is any money in the pot at the moment. At least it has not been publicly communicated, which makes this fund rather useless for the time being. So generally speaking, a platform should always keep your uninvested funds segregated from its balance sheet, and for doing that, they don't really need to be regulated, right? So from my point of view, there are likely more practical benefits for the platforms than for yourself. The license will allow them to expand their products and potentially attract even more investors. But not all platforms succeeded to obtain the IBF license. In fact, PeerBerry has withdrawn its application due to the lack of transparency from the regulator, as well as the fact that the applicants needed to be Latvians and PeerBerry's team consists of Lithuanian residents. PeerBerry announced to move their operation to Croatia and get the crowdfunding license from Lithuania, which will regulate their real estate loan segment on PeerBerry. The platform is also seeking the electronic money institution license, which will enable them to offer dedicated IBAN accounts, which increases the safety of your uninvested funds. We have recently recorded a video with the CEO of PeerBerry, where you can learn more about the reasons why PeerBerry is moving on in a different direction. Some of you have asked me in the comments whether I can share some of my own thoughts on this, which I certainly can. In fact, the information that PeerBerry might discontinue the collaboration with the Latvian regulator based on the lack of clarity and the fact that the team is from Lithuania has been shared with me a few months ago already. So it wasn't really anything new when the platform decided to make it official. First, I was definitely surprised, but their reasons were justified in a sense. Even during my own research earlier this year, where we reached out to all platforms who applied for the IBF license, we were not able to get clear answers, especially not for our questions about the investor compensation fund. We have even published a video about our findings, which is slightly obsolete at this point, as we know much more today than we knew several months ago. Many platforms in the past informed us that the requirements are evolving, which of course should not be the case. In an ideal world, the regulator should have clearly defined guidelines for all participants, and it should also not take 2 years to get the platforms approved. If you're following the P2P lending space, you are likely aware that there hasn't been much transparency about the IBF licensing process. The change of jurisdiction won't really impact your experience on PeerBerry. What will eventually change is the taxation of your income from real estate loans as soon as PeerBerry receives the crowdfunding license in Lithuania. The platform will need to withhold 15% income tax on your earnings from your investments in real estate loans. There are no changes for your earnings from short-term and installment loans, and you still need to declare them and pay your tax in the country where you are a tax resident. Now, what do I think about the fact that PeerBerry is moving to Croatia? Well, I thought about it for a second. The first thing that came into my mind is that Robocash is also operating from Croatia, and my experience with this platform has been rather good so far. Obviously, PeerBerry could not operate from Latvia with the same business model anymore, so it was clear to look elsewhere. I don't know the exact benefits from companies that are offering financial services in Croatia, but so far I'm not aware of any P2P platforms that exploited this jurisdiction or caused damage for investors. At the same time, PeerBerry is seeking a crowdfunding license in Lithuania, which seems to provide clear guidelines. In addition to that, the electronic money institution license that PeerBerry is expecting to receive comes with a lot of requirements as well. If they would simply change jurisdiction and not get any further licenses, I would have been slightly worried, I think. The platform has already spent a lot of money on legal fees to be compliant with regulations in Latvia. I am sure that some of the investments in the compliance department paid off even when they applied for the crowdfunding and email license. Overall, I believe that P2P platforms can do a lot to protect your money without even being regulated. It's really just a matter of priorities, in my opinion. While I am glad that PeerBerry is moving forward with different regulations, at the end of the day, it always comes down to the financial product itself, right? If the the lender does a good job in recovering the debt and operating legally in a dedicated market, then your investments pay good returns. So far, all protection schemes have worked really well on PeerBerry, and I don't see why this should change anytime soon. I think that PeerBerry is very much aware of the reputation on the market, and they would not want to risk it by doing something that would increase the risks for investors. On another note, PeerBerry is onboarding another shareholder, Vytautas Olšauskas, who is also the shareholder of GoFingo, which has currently around 8% stake in PeerBerry's portfolio. The CEO Arūnas Lekavičius said during the interview that Mr. Olšauskas brings a lot of experience from the banking sector. I also think that he might also help increase the equity of the company so they can get the electronic money institution license. Of course, this is a conflict of interest regardless of the size of GoFingo's portfolio on PeerBerry. The GoFingo Group is listing loans on their platforms, clearly there is an overlap of information. Now, it's up to us investors to decide whether this collaboration has a positive or negative impact on our investments. We all have seen what conflict of interest means on Mintos. You can look at how loans from Monego, Finco, Express Credit or Getbucks are performing. On the other hand, platforms like Twino, Robocash, Via Invest have fulfilled their obligation towards investors, and so did PeerBerry so far. At the end of the day, it always comes down to the people who are running the businesses, which is also the reason why we do all of these interviews with the management of various platforms. The overlap of shareholders can have a positive or a negative impact. GoFingo, as well as many other lenders, have fulfilled all obligation towards P2P investors, which is why I don't see this as a problem for the time being, at least. Should a shareholder exploit his position and start treating investors like their money, then it's going to become an issue. Again, the best way to be able to evaluate this is to do your own due diligence and monitor the P2P lending space. For now, I'm not worried about the way PeerBerry is moving forward, and I'm not making any changes to my portfolio here. So to wrap this up, I think that the benefits for investors that invest on Mintos or Twino as a regulated platform are somehow very limited. What I'm trying to say here is that having a license should not be the primary criteria to look at on Mintos or Twino. Their usability, support, track record, and risk and return ratio are more important criteria as they directly impact your experience. What's likely more interesting to mention is the new structure of how loans from the loan originators in Mexico are funded. Mintos briefly described this structure in their EMA session, which is very similar to the structure we have seen on the income marketplace. The new trust structure enables borrowers to repay into a trusted entity rather than back to the loan originator, which kind of improves the transfer of funds to investors. Structures like these may decrease the lender risk, but at the same time it increases the costs for Mintos, which are being forwarded to the investors. Hence, you might receive a lower return by investing into those loans. So at the end of the day, it comes again down to the risk and reward ratio. There has been a lot of promotion around the IBF license, which at the end of the day does not provide so many improvements. The main goal of this license is likely to avoid newcomers joining the P2P lending space, as the costs will be much higher to start operating as a P2P marketplace in Latvia. Competitors can simply avoid this by launching their operations in Estonia, Ireland, Bulgaria, UK, or other countries that don't require the platforms to be investment firms. Then it comes down to you, the investor, to evaluate the country's risk and educate yourself about all the aspects of a dedicated platform. You can use P2P Empire, which will help you to get a brief overview of a P2P lending site so you avoid investing in high-risk platforms that don't offer any reliable protection schemes. So that's been my take on the current licensing process in Latvia. I'm curious about what you think. Are you going to increase your exposure on Mintos or Twino now that the platforms are regulated? Let me know your opinions in the comments below. Thanks for watching, and I will catch you in the next video.